Have you ever looked at a dollar bill and wondered what it truly is? Every dollar in your wallet, every number in your bank account, isn't actually money. It's a promise created from nothing that you spend your entire life working to earn. But here's the paradox. The money you work for didn't even exist until someone, somewhere, borrowed it. The whole global economy runs on a system so simple and yet so deceptive that most of us never question it. Because if we did, we might realize that modern banking isn't just a business. It's the greatest magic trick in history. And like any great illusion, it relies on one rule. You must never look too closely at how it's done. Our story starts centuries ago, long before digital banking and central banks, back when money was real, physical, and heavy. Gold and silver coins were wealth itself. The only problem, carrying all that treasure was risky. So Goldsmiths, the original safekeepers, started storing coins for merchants in secure vaults. In return, they issued paper receipts, notes that basically said, "This piece of paper represents your gold." Before long, merchants realized something brilliant. Instead of going back for the gold, they could just trade the paper receipts. And just like that, paper money was born, not from a mine, but from trust. But then, the goldsmiths noticed something even more interesting. People rarely came to claim all their gold at once. They figured out they could lend out more paper receipts than the gold they actually had in their vaults, and nobody would be the wiser. As long as everyone didn't show up demanding their gold at the same time, the illusion held strong. This was the birth of fractional reserve banking, the trick that allowed money to be multiplied out of thin air. What started as a simple convenience slowly transformed into a system of control. Goldsmiths evolved into bankers, receipts became currency, and the illusion began to spread from local vaults to royal treasuries, and eventually to the very heart of nations. By the 1700s, governments had an expensive habit: war. Kings needed loans, and bankers had the money. It was a perfect and dangerous partnership. Powerful families like the Rothschilds in Europe and the Morgans in America understood a fundamental truth. Those who control debt control nations. As the Industrial Revolution boomed, these private banks became essential. They financed railroads, fueled wars, and funded revolutions, but always with interest attached. And remember this key part of the trick: every dollar created as a loan also creates an equal amount of debt. It wasn't about gold or silver anymore. It was about confidence. If people believed in the paper, the illusion stayed alive. But belief is a fragile thing. By the early 1900s, the system was stretched to its limits. Financial panics swept through the US, banks collapsed, and people's savings vanished overnight. The illusion was cracking. Something or someone needed to step in and restore control. In 1913, under the pretense of creating stability, a small group of powerful bankers and politicians met in secret on Jekyll Island, Georgia. Their mission: to design a system that would centralize power over money permanently. That secret plan became the Federal Reserve System. It was given a name that sounded like a government agency, but it wasn't. It was, and still is, a network of private banks with the authority to create money out of thin air. From that moment on, every single dollar in circulation was born as debt loaned into existence by the Fed, with interest attached. The more the government borrowed, the more money was created. The more money that existed, the more debt grew. And here's the genius of the trap. You can never pay it all back, because the money needed to pay the interest doesn't exist in the money supply. It has to be borrowed. To keep the illusion going, you must borrow forever. Wars, crises, recessions, they all became useful tools. Moments of panic were used to justify new rounds of debt creation. Each so-called solution required printing more money, which only fed the illusion further. For decades, the entire illusion balanced on one fragile promise that every paper dollar could still be exchanged for a fixed amount of gold. But in 1971, President Richard Nixon slammed that gold window shut, severing the dollar's final link to anything real. It was the final act of the magic trick. From that day forward, money wasn't backed by gold, silver, or anything tangible. It was backed only by belief and the government's promise to tax its citizens to pay the interest on its debt. The illusion was now complete. Central banks could print infinite money, but it came at a cost. Every new dollar created made all the existing ones worth a little less. This is inflation. It isn't an accident. It's a built-in feature of the trick itself. And while everyday people watched prices rise, the real winners were those closest to the money printer, the banks, big corporations, and investors who get the new money first before its value drops. It's a phenomenon called the Cantillon effect, and it ensures that wealth consistently flows upward. Fast forward to 2008. The illusion nearly came crashing down when the global banking system imploded under the weight of its own bad bets. The solution? You guessed it. Print more money. Trillions of dollars were created from thin air once again to save the very institutions that caused the collapse in the first place. Then, in 2020, they ran the same playbook. To combat the economic effects of the pandemic shutdowns, governments unleashed the largest wave of money creation in human history. The result? Global debt skyrocketed past $300 trillion. For every $1 of actual economic growth, over $5 of new debt was created. And yet, the illusion persists. Central banks now buy their own government's debt. Governments are essentially borrowing from themselves, using money that doesn't exist until they create it. It's a completely self-reinforcing circle of fiction, and like all great illusions, it only works as long as the audience doesn't ask too many questions. Today, the magic trick has gone digital. We don't even need paper anymore. Money is just code digits in a database, controlled by algorithms and central authorities. And now, they're talking about central bank digital currencies, or CBDCs. This is programmable money that could track your every transaction, expire if you don't spend it, or even restrict what you're allowed to buy. Once again, it's being sold to us as a story of convenience and safety. But the pattern is always the same. Every new evolution of the system offers more control, not more freedom. In the last 50 years alone, the purchasing power of the dollar has fallen by over 85%. Median wages have stagnated, while the prices of assets like stocks and real estate have soared. That's because the illusion rewards those who create and hold debt, not those who work hard to repay it. The trick is hiding in plain sight. We've traded sound, real money for a system of infinite credit, and in doing so, we've made the entire world dependent on an illusion that must never ever stop expanding. So, what are the key takeaways from the greatest financial illusion ever performed? First, money is not wealth. It's just a claim on wealth. And when you print too many claims, chasing too few real goods and services, inflation is the inevitable result. Second, financial crises aren't a failure of the system, they are part of its design. Crashes act as a reset, clearing the board and allowing the illusion to restart under a new set of rules. And third, real value things like knowledge, skills, and tangible assets cannot be printed out of thin air. That is where true, lasting independence is found. But here is the final warning. Every illusion, no matter how grand, eventually ends when the audience stops believing. And when trust in money finally breaks, history shows us it doesn't just fade away quietly, it resets, often violently. The real question isn't asterisk, if asterisk this magic trick will end ... It's asterisk when asterisk. If this story opened your eyes, please share it. Understanding how money is created is the first step to seeing through the illusion. Subscribe for more deep dives into the untold truths about money, power, and the systems that shape our future. And always remember, the greatest trick the bankers ever pulled was convincing the world their paper was real. Thanks for watching.